What are these transitional provisions then? Transitional provisions are just interim provisions. They don't apply throughout the period of the standard. Transitional provisions are only applicable for entities which have been adopting IND AS in the previous year. They have been adopting IND AS in the previous year, and suddenly a new standard has popped up. So what happens? Let's say there was a company your IND AS 116 became effective from 1st April 2019. From here, I start applying IND AS 116. But earlier, the company was already adopting IND AS 70, which was also regarding leases. But if you observe, there is a significant difference as far as your lessee's accounting is concerned. Let's say your enterprise, which you are basically looking at, is a particular lessee to a particular lease transaction. If it was an operating lease earlier under IND AS 17, you would have never recognized this asset. But now it requires you to recognize this asset on the date of transition to IND AS 116, which is on 1st of April 2019. This date of 1st April 19 is called as date of transition. To IND AS 116. For applying this date of transition, I have certain provisions called as transitional provisions. The transitional provisions under IND AS 116 will give two types of treatments. I can give two types of treatment. Either of them are applicable or available to the enterprise. I can give two types of treatment. Both are separated by or. You either treat this or treat that. First treatment is basically called as full retrospective method or approach. Second one is called as modified retrospective approach. I think we will understand full retrospective approach much easier. I'll tell you. What is this full retrospective approach? When was your standard applicable from? 1st April 2019. That means the previous year on 1st April 2018, this is the beginning of the comparable previous year. Correct? So under full retrospective approach, I say that first financial statements adopting IND AS 116 are prepared on, what is the date? 31st of March 2020. That is the first year on which I start preparing, or I prepare my first IND AS financial statements adopting IND AS 116. In this year, when you prepared your first financial statement on 31st March 2020, what is the comparable previous year? My comparable previous year is the year 2019-20. So under this approach, what we are supposed to do is we will have to restate the previous year by applying IND AS 116 at the beginning of April 2019, at the beginning of the previous financial year, that is April 2019. And the cumulative effect on April 2019 should be recognized in retained earnings. So earlier when I adopted IND AS 17, I never recognized an ROU asset, or neither I recognized a lease liability with respect to your operating lease. But now on April 2019, I'll have to revise it. So on April 2019, I'll record the entry like this: ROU asset account debit, to lease liability, and the difference either could be a debit or a credit. I will take the difference to retained earnings. Okay. Apart from passing this entry in at the beginning of 2019-20, 1/4/2019, even the year 1920 financial statements are required to be restated for comparison with current year. Your current year is 2020. One second, guys. Sorry, I'm really sorry. The date of transition should have been April 2018. Comparable period is not 1920. Comparable period is 1890. Correct? First Ind AS financial statements are prepared on 31st March 2020. Comparable period is 1819. So your beginning of previous year is April 2018. So therefore the cumulative effect on April 2018 should be transferred to your retained earnings. So your April 2018, I'll pass an entry, and 2018-19 financial statements should be restated to provide comparatives for the year 2019-20. Correct? Now what is your modified retrospective approach then? My modified retrospective approach requires nothing to do with all these things. Straightforward. Apply the requirements of IND AS 116 directly on April 2019. So on April 2019, I'll record the entry as ROU asset, account debit, to lease liability. Even then there is a difference, right? So instead of recognizing it on 2018 April, I am recognizing it on April 2019. And I am saying the difference should be transferred to retained earnings. transferred to retained earnings when on 1st April 2019. Under this modified retrospective approach, you are applying it retrospectively only from 1st April 2019. Therefore, your comparable previous year that is 2018-19 is not restated. You are not required to restate the last year or the comparable previous year of 18-19 to provide the comparators of the current reporting period, that is 19-20. So look at what I said. I said if I apply full retrospective approach, first Ind AS financial statements under Ind AS 116 are prepared on 31st March 2020. Therefore, last year corresponding previous year is 18-19. This 18-19 has to be restated. When you should restate? I will restate it from the beginning of 1st April 2018. And the cumulative effect on 1st April 2018 should be recognized into my retained earnings. So on that 1st April 2018, I will pass an entry as ROU asset account debit to lease liability and I will transfer the differences to retained earnings. 18-19, that is the previous year, has to be restated to provide comparison with current year of 19-20. If I go with modified retrospective, retrospectively apply the requirements only from 1st April 19. So that means the previous year is not restated. The difference should be transferred to retained earnings on 1st April 19 itself. 18-19 year is not touched. Now, someone might have got a doubt. Sir, if I go with this modified retrospective approach, I have a problem. Because I may not be able to provide comparative financial statements for the year 2019-20. 19-20 financial statements as per Ind AS 116. 18-19 Ind AS financial statements as per Ind AS 17. How are these two comparable? Not comparable, but Ind AS 116 has given you a relief. That is a relief, one-time relief by applying modified retrospective approach. Only one time. Subsequent year, ultimately when you go to 2021, you have already recognized in 19-20 your Ind AS 116. So next year it becomes comparable. Only for that 1 year, there is no comparison because comparability is not provided or not possible when you are not restating the previous year, that is 18-19. This is acceptable under transitional provisions of Ind AS 116. If the transitional provisions were not there, I would have only adopted full retrospective approach. Since the transitional provisions were there, he is giving me an interim relief. A relief which I am saying, I don't have to restate the previous financial statements. I don't have to provide a restated comparative previous financial statements of 18-19 along with the current year, that is 19-20. That will bring us to the end of these transitional provisions applicable for Ind AS 116. Guys, these are applicable starting from 1st April 18 or 1st April 19. These sitting in the year 2021-22 financial year, ultimately it is of no use. It is completely irrelevant.